Welcome to TradeTheNBA.com. This is John. This report is for the 2nd of August, and we started off, fairly decent for the month beginning. I mean, we knew we were going to get a little bit of a bounce. We also had a bit of a retrace, but we finished back up towards the highs. It led to what we were looking for, which was this turnaround, the shakeout that we talked about. The problem I see with it is here. We didn't get that orange spike below the red to give us a real strong impetus. Doesn't mean that this can't continue to rise. We've seen that plenty of times before, where it comes close, but the reality is you really want that dip below. The last time it didn't quite do it. What you tend to get is just a soft period of weakness, like right here. It came close, then shot back up, and all we got was a retest of where we were. So that doesn't bode well for expansive move, at least at this particular point. The NQ is just about caught up. I mean, you're going to be right about these highs right here to match it. This is a little bit of an anomaly peak right there that happened. Not bad from its reads. Pretty much the same. Euro likewise, but still frothy. Needless to say, though, that cyan well below red, just giving more impetus. Just an incredible move. And then you see, likewise with bonds, some of this makes absolutely no sense other than central bank involvement and or people fleeing to look for safety when it comes to bonds. This is the same story we talked about oil, that we need to retrace. Then all of a sudden I was mentioning how supplies were going to dictate and that we would be watching, inventory buildups and that, and sure enough, you get a massive build. Still left things fairly decent despite the fact that there was an initial shock, but we had these positive extremes that needed to get filled. And we filled back a couple of them, but it's still within a buy, even within that. However, now we've reached the plus 13.5. Also at the steel, short-term buyers falling below, so that could create a little bit of softness, just like we've seen with the relative market, but doesn't necessarily bode for a significant decline of any way, shape, or form. And looking at gold's continuing its run, we haven't seen any change. And now it's paralleling right here with long-term buyers with shorts right underneath. So as long as it's maintained, we had a little bit of short-term buyer fade out as it gets to a peak here. Plenty made some decent money on this. Any retrace, I would look for a 50%, and that would be another buy opportunity, but I don't know that we're even going to get that far. And so here's what we had. We had that pre-market rise, shaking out anyone who was short over the weekend, faded right back down to the exact same mean, and then boom, up right back up to the highs. It's just sort of a classic run. We're getting close, though, to new fund money coming in the next couple of days, so I would expect that we're going to see a little bit more of a build that should propel us. If we see selling into that, then I think that we really have to take a look at those dailies and make sure that things are aligned to a bullish stance, because if we don't see movement, then I would think that there's plenty of selling into that new money volume, and that we would definitely want to be a little bit more cautious about. So, but all in all, this is a pretty sad range, is all I can say. But you get those periods and then it explodes, and you got to be ready to go with whatever the signal is, because you don't know immediately when that's going to happen. Now here, what we would look for is oversold, then it gets a nice punch, and we're still generally long anyway, so no surprises at this particular point. We'll just keep at it. As always though, trade well. We'll talk again later.